Hey, good morning, everybody. Happy Friday. Let's remember, Monday is basically a half day in the market. I think the markets close at 1 or 2 p.m. And Tuesday, July 4th, is a national holiday, so the markets will be closed. So you'll be back to trading on Wednesday. I will be live Monday morning. Now, with that said, today is June 30th, which is the last day of the second quarter. What does that mean? You're going to hear the term window dressing. Window dressing is when institutions, hedge funds, holding companies, mutual funds, they basically tidy up what is on their books. Meaning, let's just say NVIDIA had quite a run in the first quarter, second quarter of this year, and they're looking to exit out of NVIDIA. Why? Because they had a million shares of NVIDIA. NVIDIA went up over 100%. What is it doing? It's weighing in on their books, meaning too much of their investment is in one stock. So what will they do? So this happens with some good stocks, which is why you can see some type of pullback today. Any stocks that have been ripping and roaring, you might say something like, okay, I'm a holding company. I have Meta, NVIDIA, I've got Apple, I've got all the big players. But what am I going to do? Well, NVIDIA and Meta went up over 100% so far this year, making my weighting average a little heavier in those two stocks. So I will likely trim some positions in Meta, NVIDIA, some other stocks that might have exploded, maybe AI, something to that extent. What else might I do? Well, companies that might not have such a strong valuation, something like a Carvana, per se, right? Yesterday, Carvana was as high as $29 a share. Let's remember, some analysts put it at $5, $1, $2, 50 cents a share. So are these institutions wanting to have Carvana on their books after this latest run? Again, in my opinion, probably not, which is what we saw yesterday when Carvana hit 29. I think it closed down to 25. So I'm going to give you the GPT definition of window dressing. Window dressing in the stock market refers to a practice of manipulation. I always speak about manipulation of a company's financial statements or portfolio holdings. We're specifically talking about portfolio holdings to create a more favorable impression for investors. It involves making strategic changes to the company's balance sheet, income statement, cash flow statements shortly before the end of a reporting period. So again, this happens at the end of March, happens at the end of June, happens at the end of September, and happens at the end of December. There is manipulation because you want to see your fund returning some good investments. When you look up your fund, and let's say you're looking at Fidelity Magellan, you don't want to see pieces of shit companies in there. So what do? They use window dressing to be like, oh, shit, well, they're an Apple, NVIDIA, Meta. Oh, I like all these. Big tech. Oh, Netflix. Okay, let's go for it. However, window dressing is generally considered unethical and can be misleading to investors. So when I suggest urgent caution on a day like today, specifically, I'm talking to you all. Please understand that there's going to be a lot of swapping of positions. Again, meaning they're going to sell something. Now, what would they do if they want to get into a shitty position? Well, they're probably going to wait to the beginning of July. Monday is a half day, probably won't be buying in. Tuesday is a holiday. So then you have Wednesday, Thursday, Friday. So I'm taking some stuff off my books. I'm going in cash. That tells me that I could be purchasing next Wednesday, Thursday, Friday. And I might purchase companies that have been beaten up. Do they want to be in Disney right now? No, because anybody that's in Disney at the end of the quarter is going to look foolish on their books. However, would they like to be in Disney for quarter three? Probably, and probably quarter four. Why? Because if Disney goes from $88 to $114 by the end of the year, then quarter three and quarter four are going to show similar, like 14% returns for that stock rather than taking a loss. Okay, this is pretty interesting as well, and it's not to scare everybody, but 42% of CEOs surveyed at the Yale CEO Summit have said that artificial intelligence has the potential to destroy humanity 5 to 10 years from now, according to the survey results shared exclusively with CNN. So basically, I'm so glad Jim Cramer didn't say something like this, because then we'd all be dead tomorrow. But they're basically saying AI could be extremely dangerous. We all know that. Now, this is just in as well, and it doesn't really matter to the market because Bank of America is up 0.5% pre-market, and again, it's at like the $28.50 level. Bank of America is facing $100 billion in paper losses in the bond market. So the same losses or paper losses that put Silicon Valley Bank out of business or FRC collapse. Remember, Bank of America is suffering similar losses that are on paper. Once they sell, it's going. I mean, so banks passed their stress test yesterday. Do I believe it? No, I think banks still have a lot to worry about, especially with interest rates rising. But again, Bank of America, $100 billion in paper losses. Now, it doesn't mean they're paper trading their account. Again, it's on their books. They just haven't sold. If they were to sell or exit their position today, they would have to write down, they'd have to take the $100 billion loss on those bonds. Okay, interesting. Nike overnight or had earnings yesterday. They were off up to 3% this morning. So what did Nike say after earnings? They had a top line beat, a bottom line miss. Nike said, well, our pricing has been down on a lot of our products, but don't worry, because in the remaining part of this year, we're going to increase retail pricing. So the market likes that and is being bought up. They're buying up the Nike dip. Now, to me, I could say the same shit. Yeah, I'm going to increase pricing later in the year. Whether I do so or not, whether it shows up on my books or on my margins or not, that's to be seen in quarter 3 and quarter 4. So I think it's just a crock of shit when companies even come out and they're like, yeah, but we're going to do this, or we're going to do a stock buyback or whatever. It's there to camouflage what you're not seeing. So do I trust Nike? No, I'm not trusting Nike. Okay, let's get to the SPY yesterday. SPY yesterday, the magnetic draw was up to 438, meaning the market was being pulled up to 438 yesterday. So what did we see as far as the ranges going yesterday? 438.28, which was towards the top, 435.54, which was towards the bottom. Now, if you joined me yesterday or even on Webull, Twitter, moomoo, I put my SPY prediction. I gave you your bull case scenario. Bull case scenarios, SPY dips to 435.60 and shoots up to 440. Now understand, the low on the SPY yesterday was 435.54. So I basically missed calling the low by 6 cents. I said it would shoot up to 440. It didn't get there. It got to 438.28, but we know where it finished the day. And if you're looking at the SPY pre-market, we're sitting right at 440. Now, here's the interesting thing. Your bear case scenario was that we were going to 439.60, reject, and going right back down to 435.60. So the fact that that didn't happen yesterday, but the numbers, the same numbers were in play, 439.60, 435.60, and again, the low is 435.50. It's still in play for today. I've mentioned stocks. So what stocks do an institution want to get into? Okay, well, we get to that real quick. Why don't I do that right now? I talked about my watch list for a number of days. What would I want to get into? Well, how about Carnival? Carnival's been ripping for quite some time. Here's the one with Carnival. They were selling off a little yesterday. Again, it does not surprise me that institutions, hedge funds, mutual funds would like Carnival to be on their books. Why? Because it's likely Carnival will be at $24 or $25, maybe even $28 by the end of the year. So you say to yourself, well, it's at $17 now. Even if it dips to $15 and goes up to $26, let's just say. $26 is a whole 49% higher than where it is now. Remember, mutual funds, holding companies, they're expected to return anywhere from 11 to 12%. Would be a great year. A lot of them return under 10%, 10, 9, 8. So if they can get from one of their investments a potential 49% squeeze or upside potential, something like a Carnival, it probably makes sense to load that onto their books. So again, I'm looking at the SPY. Where's the SPY? It's probably 440. Holy shit, it spiked again at 830. So maybe we had some data drop at 830, but again, the SPY is at 441. So let's go over the SPY scenarios today. We're obviously going to open, let's just assume we're going to open right at 441 where we are now. It would not surprise me if we dip someplace between 440 and 441, but let's just assume 441. What would I do? Well, easily, before I make my determination of what I'm looking for on the SPY, I'm going to go over to Discord. So I'm going to pull up Discord. What am I going to do when I pull up Discord? I look at the same 5 things every day. The first thing I do is net flow for the market for the last 5 days, okay? Net flow for the SPY past 5 days. Top flow, which tells me the top bullish flows and bearish flows for options. And then I get the dark pool level of the SPY because, as I've mentioned, over 50% of transactions in trading happen off market that we don't even know about and we don't even see unless you're following dark pool transactions, which I do. You've got to follow dark. How to use that? You use the flow and algos room. So I'm in the flow and algos room. First thing I did is look at the market net flow. Again, going back 5 days. So what do I see? Well, shit, it's spiking. Call premiums are spiking. Put premiums are on the increase. But again, the market net flow remains bullish. So I've been mentioning that for a number of days, which is why we come up with the principle or the strategy to buy the dips. Now, again, I'm actually a little more bearish today. I happen to think the market might take a decline. So right now I'm on the sidelines. But we talk about most bullish and bearish flows. Well, what's at the top again? Tesla, bottom, top of the bearish flows. Probably hedges, SPX and SPY, probably hedges. So then I'm looking, what do we got? Big tech, Microsoft, Amazon, NVIDIA, right? Netflix, there you go. There's big tech. 1, 2, 3, 4, 5 out of the big 7. What are we missing? We're missing Apple and we're missing Google. Remember, I was a Google bear for a while. Google actually found a little support. It's still trading lower than where it was when I started being a Google bear. It was 124, 125. Now it's 120 flat. It's probably up pre-market. So with that said, when you trade any of these options, you're going to have an easier in and out, meaning the spreads between the bid and the ask for options traders will be more narrow. If you're trading Microsoft, you're only going to pay a few dollars. If you trade something inactive, how funny that Bank of America is there and Nike is there, as I was bad-mouthing both of those companies. So that's pretty interesting. All right, let's look at the net premiums for stocks and the SPY. Again, this goes back 5 days, so we're going back to last week. Well, what are we seeing? Here's the call premiums above zero, which is bullish. All of a sudden, we went a little bearish, and then it just dropped out of the moon yesterday. So this is telling me to be more apprehensive. The fact that the SPY is pushing 441 pre-market and ripping higher, whereas call premiums are still up here. Put premiums are still pretty high. Call premiums, they just stopped. They just dropped. So again, I happen to think the SPY could be a little bearish. It's telling me, what, 434? I actually think that's a possibility, 434 if we have a red day today. But we're not there this morning pre-market. Where are we sitting pre-market on the SPY? 441.06. When we look at the dark pool levels, what do we see? Well, we can see this one right here, 441.03. So we're sitting right on a dark pool level. Understand, if that dark pool level acts as support, the next level higher is this level right here, 443.79. I say plus or minus 20 cents. So you can put it in your memory. You could say 443.50, or if you want to round up, you could say 444. So that's your bull case scenario. So let's get right to it now. Bull case scenario is we're going to see 444 on the SPY, meaning we open up out of the market. We're at 440. We drop right down. We go to 439, and then we fade higher for the remainder of the day. That's your bull case scenario. Again, your bull case scenario is we're opening at 441. We drop to 439. We drop to 440. Wherever the market finds support, I'm not going to pick that out because I don't have my crystal ball today. Do not have it. But what's going to happen is we drop, we dip before we rip higher. So again, bull case scenario is we drop to 439, maybe even 438, where we closed yesterday, 440, somewhere down from where we are pre-market, open down, get bought up, and we finish at 444. There's your bull case. Now let's go over the bear case scenario. The bear case scenario is futures are ripping higher, okay? The SPY from 438 flat is now at 441 flat, so it's up 0.75% this morning. Okay, so what's going to happen? Market's going to open. People are like, oh, it's Friday, man. Keep buying, buy. Stocks only go up. So we're going to see the SPY rip to 442. Maybe it goes higher, 442.50, 442.80, something like that. We're going to see rejection, similar to what we saw yesterday. So we're at 442.50. Let's just call that as the rejection number. Again, this is your bear case scenario, 442.50, and then we drop down to 438. Okay, so again, we're going to finish higher than where we closed yesterday, so we can still be green, but it can still be a bear case scenario because the first thing we do is rip higher. That's when you get into your puts, and then you can ride it down 4 points. Why would you do that? Because you already missed the pre-market run. Anybody that likes to chase a gap up or chase a gap down and go sell into that, you're playing the wrong game. Generally, when we gap down, they buy the dip. Generally, when they gap up, there's a bit of a sell-off. So again, bull case scenario is we dip and then we rip and you see 444 on the SPY. Bear case scenarios, oh, we're ripping right out of the gate, 442.50, reject that and head right back to 438. So that's what I'm thinking. SPY spiked on, PCE news, lower across the board. Okay, I didn't know we had PCE numbers. Thank you so much for sharing. Apple probably ripped higher. Where's Apple? At probably like 193. Let's just see where Apple is pre-market. Okay, there are the Qs. The Qs are up over 1%. Yep, right at 1%. Again, it was 0.8% before, so they're ripping higher. Tesla is up 2.5 points, almost 1%. I mean, Affirm is up 2.5%. Chewy is up 1.32%. Apple, yep, 192, or just slightly there under 190, 180, up 2.2 points, 1.16%. So understand that is a pretty substantial gap up. If you like what I do, please hit that like button. If you have any questions, you're more than welcome to ask on the side. Let me just see what else, other stories I wanted to share. And then we're going to get into some stocks again. And I mentioned window dressing. If you missed the beginning of this video, you have to go back and understand what window dressing is, which stocks might be more likely to sell, which stocks analysts and fund holders might be more likely to buy to have on their books to start out the second quarter. I gave you my bull case, my bear case scenario. I won't mention the Diet Coke thing. We can. Let's just see. All right, we'll skip all that stuff. All right, so any questions, please ask. Other than that, I'll talk about a couple of stocks that I'm looking at today. Yesterday, I barely traded. I made one trade yesterday. Why? Because I had 3 doctor's appointments. If I cannot find myself in front of my computer screen, checking out the 1 minute for sniper tool, checking out the 3 minute and the 5 minute for momentum, I'm not going to trade. Again, I need to see volume. All right, with that said, let's just see what stocks I got on the list here. Carnival's up 3.5%. Carvana's up 3.5%. Again, I think Carvana might fade like yesterday. So if I was to be just pick bullish or bearish stocks, even though they're both up over 3.3% this morning, I could be a bear on Carvana. I could be a bull on Carnival. I'm looking at Disney. I don't even want to mess with Disney because Disney's been weak. So if the Dow is strong, it'll lack. And if the market is weak, we'll something to see. All right. So again, the SPY is sitting right at the 441 number. So again, if it does rip higher, I would expect 442, then this sell off right to 438. That's your bear case scenario. Your bull case scenario is we're going to dip out of the morning and then we're going to rise to 444. Well, quick question. You lost SPX being greedy. Okay. So that's the thing. What you want to do, and I'm not saying what you want to do, but what I would do, and if I was in that a situation, first thing I want to do is make sure I'm getting the right entry. You have to have a complete strategy. So once you're entering, oh, you made it back already. Okay, well, that's good. But let's talk about taking a loss. When you're entering a position, you don't just want to have FOMO. Okay, you know what? Let's bring this to a lotto. Let's just talk about lottos today, okay? So same thing. Entry is most important, having a strategy. So how do you play lottos on Friday? Here's something you do. First, you say to yourself, let's just do the bull case scenario. Bull case scenario, market's going to rip higher to 444. Let's just say bear case scenario. Bear case scenario is we're sitting at 441. Markets are going down to 436. Let's just assume there's a little more room to go there, okay? So if you're a bull, what you want to do, and it's a little late because all these stocks are ripping up 3%, 2%, 4%, Mara's up. But you would go back yesterday and you'd say, okay, right before close, if I'm expecting some of these stocks, whether it's Netflix, Apple, to rip higher, let's give an Apple, for example. Apple, for example, I would have probably looked at something like the 195s or the 192. So let's just see what the Apple options are, the calls. Let's see what they have open. Okay, 192.50s on the Apple calls that expired today. They were going for $4 a contract. So people that say, I have no money in my account, I cannot make a trade, I don't have enough to trade, a stock like Apple, it's $4 to $5 yesterday at close. Now, again, these are the 192.50s. So Apple closed at what? 190 and change yesterday? 189.59. So understand, you're 3 points away. You're 2.5% away from being profitable on these. So what makes it a lotto? What makes it a lotto is if you say market's bullish, they continue to buy the dips, and you can do this for any of your stocks. So I'm going to anticipate that the market's just going to rip higher tomorrow. We're going to see 444 on the SPY. So the fact that we're gapping up to 441, all you people that were bullish, understand that's a good thing for you. But again, so you're saying, where would I need Apple to go to? Well, if Apple makes it up to 192, where it is now pre-market, these options will probably be worth somewhere in the $60 range. So you got in at $5 before close. up to 60. Now, it works as well. Say we were gapping down this morning. You could say, well, they're just going to buy the dip like they did yesterday. So if you come up with a strategy like buy the dip like they did yesterday or buy the dip like they've been doing, so you're looking at a Netflix or whatever that was. Let's say Netflix was $4.29. You're looking for Netflix out of the gate yesterday to drop to like $4.20, $4.19. At that point, you go and say, I'm going to buy the 440s. The 440 calls, which would have been $20 out of the money when Netflix goes from $4.20 back to $4.30. And let's say it opens this morning at $4.33 or something like that. Again, your call options, which are not in the money, would probably triple. Let's just say they're $6 or $8. Now you're looking to get $34 to $42, something like that. So it doesn't mean your options have to be in the money. Also, when you're playing a lotto and you say, okay, well, Friday is going to be bullish, we're going to fade higher to 444. If you're in any of those positions, you're going to hold. Now, me, again, I'm not trading with emotion. I happen to think the market is due for a nice pullback, a nice consolidation move. I generally see those some days when the market rips higher pre-market, because what do you see right out of the gate? The market rips. Its futures are higher. It rips out of the gate. And then it just consolidates. It comes back. So again, my scenario for the bear case scenario, market going to 442, something like that, 443, and then pulling back to the 438 or 439. Again, market's still going to finish green, but I could still be a bear and make money that way. All right, with that said, finish this morning. If you like what I do, please join me Monday morning. Heading over to Discord. Anybody's more than welcome to join on Discord right now. I'm going to put down the link to our Discord on the question side right there. It's SOC platform. And let's just see, show it across. So if anybody wants to join, not sure if Romeo is doing live trading today. He did live trading on Wednesday, live trading on Thursday. I think his last trades, he's 8 victories, 1 loss, average return 45% per trade. That's pretty damn good when you're struggling. Me, I'm 14 out of my last 16 trades, and the only 2 trades that I've taken losses on is because I didn't buy myself enough time. So again, thank you for joining me this morning. Please join me on Monday, and I